One of the concerns that we and others have raised is if you think about how retail investors transact today, you see a price on the screen, you send in an order, and you get that price or better. And what we worry about in the auction proposal is it introduces a lot of uncertainty and a lack of transparency to the process. It's unclear whether the price that you thought you were going to get when you sent that order in is the price that you're actually going to get. It's like if you go to the supermarket and you go to buy something for $2 and you go to the register and they say, no, it doesn't cost $2, it costs $1.95, or maybe it's $2.05. You just don't know. And that uncertainty and that lack of transparency about price is clearly something that is detrimental to the retail investor experience.
What's your view, Stephen, on what the retail experience looks like under this proposal?
Under this proposal, there would be a slight delay where information about that individual investor's order is broadcast to the entire market in the hopes that then other market participants will show up and compete in an auction for that order. This is going to happen 5 to 10 million times a day. And we're just hoping that there's a bunch of market participants who are all set up to participate in those auctions, and that the information leakage that happens between the time that that order information is broadcast to the whole market and then when the auction actually occurs, that actually ends up being beneficial to the execution of that order. It's much more likely that that information is going to be detrimental to the execution quality that that order ultimately receives.
And the point Stephen made is a really good one. Letting the world know the origination of an order when it goes into this auction is information that is not likely to be used in a positive way by the broader market if made public.
Sounds like someone could front run that order.
That's exactly one of the things that we comment on in our letter.
Now, what you just saw was something Citadel Securities posted on their Twitter. They go, the SEC suggests that its order competition proposal could save retail investors $1.5 billion a year. We analyzed the data and determined that retail investors would actually lose $2.4 billion. It seems as if they're a lot more worried about this than even retail and the SEC is. And it also seems like it would save them $2.4 billion and not actually make us lose. Now, shout out to Edward on Twitter. He goes, AMC, here's my observation on the high frequency trading algorithm abuse done by Wall Street frauds onto our AMC stock. This data reveals the result behavior of Wall Street frauds. Notice how the algorithms continuously repeat as though it's all predetermined by high frequency trading computers. Now, this is something that we have been relatively tracking on the channel. However, I like this display. I want you guys to screenshot it so you can understand kind of where we are, where we usually trade, and I like the colorful diagram that he has drawn out. Also, based off of his chart, we are sitting in a red cycle, which means we are coming up on this major pressure release point where the FOMO buying occurred, algorithms choked back in January of 2021, and the minor pressure release got released back in June of 2021, which is interesting because we actually have earnings this upcoming week, so it is going to be a very important week. Speaking of that, look at the updated quarter to date numbers. We have officially crossed the $800 million total gross number for the quarter. Everybody ignore the FUD, ignore the narrative that they push out on May 5th earnings for AMC. AMC is trending in the right direction. Now, speaking of that, I want to take a step to the side based off of all of the drawings that we usually have drawn out on AMC and GameStop and the S&P 500, and I want to take a look at two indicators, the on-balance volume and the Bollinger Bands, just to show the segment that we are coming up on in AMC. So first of all, right now, I just want to let you guys know, if you haven't been keeping up with the channel, I assume we are going to scale to the upside, and purchasing calls at least a month, 2-3 months out is a safe bet, to be honest, on AMC. I'm not a financial advisor, I don't give financial advice, but I see this thing curling up and potentially having a major move between early May to mid-June. Now, based off of the on-balance volume, AMC is curling back up, nearing all-time highs for the on-balance volume indicator, which means that shareholders have not let the stock go, and it is also right in between the Bollinger Bands, which shows that it has a little bit of room to run and or fall. We're sitting kind of in a middle segment. We got rejected on the Bollinger Bands. However, we are going up for a retest, which is a good thing to see. Taking a look at GameStop's chart, the on-balance volume is basically at all-time highs. This stock has been accumulated like crazy by shareholders. It broke out of the Bollinger Bands very hard come that earnings. We've been tracking it to a T. It's been selling off, and we are expecting that gap fill at $18.30. However, I assume GameStop is going to have a temporary pop because it is very oversold under these Bollinger Bands, while the on-balance volume is very high. I think it is going to be hard to push GameStop a lot lower, which means when it has a sympathy pop towards AMC, or if shorts start to cover on one, of course they're going to cover on the other, but GameStop is going to have a decent move towards AMC earnings things, in my opinion, while AMC moves, especially due to how oversold it is on GameStop. So I also think that based off of what I said, trading AMC, I think the same thing goes for GameStop at least 1, 2, 3 months out. Now, Big Pension exited First Republic stock and bought AMC and D.R. Horton. State of New Jersey Common Pension Fund D, the pension's largest fund by assets, exited a position in FRC and bought more shares of theater chain AMC and home builder DH and slashed an investment in home furnishing retailer Wayfair in the first quarter. The fund disclosed the trades in a form it filed with the SEC. Basically, New Jersey State Pension Fund, its largest fund D, sold shares in FRC before the collapse and actually put more money into AMC shares. Now, speaking of banks, before we move on and how this is going to affect AMC and GameStop, if you guys want up to 15 free stocks, use my link, download Moomoo, make a deposit. It can literally be $1. You are going to get 15 free stocks valued up to $2,000 per stock the more you deposit, which is essentially a chance at 30 grand. So again, guys, that link will be in the description and in the top of comments down below. Also, guys, if you don't want to miss stock opportunities, it's well worth it. Pop in the Discord down below. That link is under the Moomoo link as well. Back to the video. Banks are sitting in a tournament, an 8-team single elimination. JP Morgan, Signature, SVB, Bank of America, Wells Fargo, Credit Suisse, Citibank, and JP Morgan as of now is at the top key of the list. Now, in this tournament, banks can choose banks that already lost to basically come and resurrect them. JP Morgan is doing that right now. JP Morgan is planning to buy First Republic Bank. JP Morgan is waiting for the government to seize and shut down First Republic, and it will make a bid right after it happens. Now, here are basically the ones who got tumbled and the ones who are sitting on the benches waiting to be subbed in by bigger banks. Since March, all of these banks have collapsed. FRC, the 14th largest bank, Silicon Valley, the 16th largest bank, Silvergate, the 147th largest bank, Signature Bank, the 29th largest bank, and Credit Suisse, the 45th largest bank in the world. Now, the busiest week of earnings season for the S&P 500 saw nearly twice as many positive guidance announcements as negative after trending lower since late 2021. Overall guidance is now moving higher, and you can see that in the chart right now. We still do have some important earnings going forward, but I think some of the numbers are a little bit inflated, at least for banks. As for the OBV and the BB indicators, the SPY is touching the top of the Bollinger Bands, which expects a rejection very, very soon, and the on-balance volume is not really ticking up, especially on the size move that we have. Now, if I brought the drawings in, the SPY is fighting that 0.5 fib retracement level, and you're going to see one of two things. The one thing you can definitely expect is it be very, very volatile, but take a look. Once it retested this over here, it got a major snap to the upside. However, once you see the same candle that we're trading at right now, it got a major smack. So if you're in an S&P 500 call or put, best of luck. I hope the luck is on your side, but get ready for volatility going forward with the S&P 500. Overall, guys, hopefully you are enjoying your weekend. Thank you so much for watching today's video. Hit the like button on your way out, and if I deserve it, hit the subscribe button. I love you all. Lottery Stocks out.